Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a fantastic Friday. Today, we're going to be getting into our daily cryptocurrency market update. And the markets are pretty volatile out there. You know, in yesterday's video, we were essentially coming out and saying that we don't trust the pump, the relief rally that we had on the back end of the FOMC meeting one bit, because the Fed was still very hawkish. You know, that was my take from that. And I think markets across the board were looking for relief that they somewhat got, with the Fed saying they're not looking at a 75 basis point rate hike. However, they were still going to reduce the balance sheet and go on with a 50% basis point move, which had been somewhat priced in. But the overall consensus was that things, in my opinion, were still very hawkish, and still things are set in motion to get a lot more tight for liquidity and really the economy and the stock market and everything across the board. So we're going to be getting into that in this video. Today, of course, is the non-farm payroll data release for the United States. Now, this is going to be another market moving event, and it's actually going to be good news. It's going to be bad news for your equity and your stock market. I've actually just finished wrapping up another video with David Bell. You guys know him from Macroeconomic. I'm sure some of you follow him on Twitter. And we were talking about the non-farm payroll, and I'll give you a quick sneak peek of what he's essentially reckoning takes place as a result of good news that may come out here. Because Jerome Powell's really go-to thing now is that the economy is supportive of a aggressive rate hiking cycle, given how tight the labor market is and how, you know, it seems very strong, and we're not seeing that huge slowdown and downturn in the economy that wouldn't be supportive of rate hikes. So that actually, if that comes out positive and the labor market is showing strength and is, you know, above or at expected or above, that's going to be negative, because that's going to support a aggressive and hawkish Federal Reserve. So let's get into it all. We'll be diving into Bitcoin and a number of things. Also talking, you know, there's a lot of good news here. I know things seem kind of doom and gloom, but they're not. Crypto isn't going anywhere, guys, and it will come out the other end of this, along with the majority of things. And the reason being is because the Fed are going to have to undo everything that they're currently doing at some point. When that is exactly, we'll try and keep you as informed as we can. So make sure you hit that subscribe button, guys. So the markets are down considerably. Bitcoin's down 9% in 24 hours. Liquidations across the board to both the up and the long side. Yesterday, we did tweet, and if you're not already following me on Twitter, guys, head over to @RealAllInCrypto, and we said we didn't trust this market, or we didn't trust this pump one bit. And it really was the definition of a relief rally. So we'll start off on the bigger term timeframes. 3-day chart is one of our favorites because we've got the 200 and the 50-day moving averages, and we're looking like we're going to get that death cross. You get that time and time again. And we've also used these long-term regression bands to really show us where we are within Bitcoin and its current cycle. Things weren't looking good, and we've been watching this and saying, look, you are going to likely break below that. Conditions support it. You know, there are, of course, examples where you have seen and kind of used this halfway mark as a springboard, but that's typically in an uptrending market where you're the right side of your 50 3-day MA. So you can see when you've kind of crossed this halfway mark, if it's an uptrending market, you're above your 50, you're going to see more continuation. We're not there today, just like we weren't there in 2018. And just like we weren't there in 2014. And you can see this death crash coupled with where you actually are, you know, likely I think is going to signal more downside for me. And you guys know that I'm still long spot crypto. The crypto, I still hold my cryptocurrencies, but I am shorting the derivatives market, or the futures market, I should say, really the prep futures, as a kind of hedge, because I'm looking to preserve here. And there are opportunities, I think, for people that are looking to short to the downside. Huge risk to that, though, is, and Wednesday was an amazing example of it, we'll get rid of the long-term regression bands. Wednesday, you know, I actually got liquidated, and we told you on one of my positions, or I got stopped out. And that was on the back of this pump here. This is the very definition of a relief rally. The second I saw the equity market, is really what I was watching, start to rally on the back of that news and get that relief that they were potentially looking for. We'll quickly switch to the NASDAQ composite. You can see over here, I knew that crypto was going to follow. So I closed a lot of them and I actually re-entered the shorts. We said yesterday we were looking for opportunity. I think potentially, you know, we're going to see what today brings. This is going to be another market moving day with the US non-farm payroll. If it's good news, it's very supportive of what the Fed's trying to do and a aggressive rate hiking cycle. So watch out for that, guys, because good news is probably likely to see further crypto downside. Bad news is likely to see the opposite. And something to remember on the trading side of things, and this is something I have to remember myself is these markets are going to be volatile right now. That's good for traders, but they're going to be very over exaggerated because of how sort of pent up everybody is. And if it's bad news, potentially you can get a bid here and see an upward movement. If it's good news, it is going to go down, and crypto is currently selling off at the moment. And if it sells off going into Friday, remember your equity market actually doesn't trade over the weekend. So watch how the likes of your S&P, don't watch the futures, watch the actual thing. This is a futures closes. Well, Monday and over the weekend doesn't have too much of a positive outlook to it, in my opinion. And that's just where we're at. That's what we're looking at moving forwards. Sounds doom and gloom, but guys, nobody's more bullish on the crypto space than me. And when Bitcoin does find its bottom, I'm looking at this and I'm thinking, okay, well, I don't really see too much reasoning why we can't get down to 34K or sort of your 32K range. And then potentially, depending on how bad things get, we're looking for things over here. And I think lots of people right here calling sort of counter trends and going, oh, well, everybody's looking bearish right now. No, that's simply not the case. Lots of people are still, I don't want to use the word in denial of what's going on a sort of macro scale, but more still expecting, some sort of a rally and a kind of blow off of markets. And then we start the sort of downwards cycle that I think we've already currently started. I mean, you've only got to if you look at the likes of your equities, you're at this really critical level right now, guys. I mean, you're trading below what the crypto sniper, Francis Hunt, he's a good friend of the channel, essentially we're calling for a macro head and shoulders and that there's more downside continuation to come. And I do indeed think that's the case. What I'll do very quickly is just look at the dollar, and you can see it's actually finding support here. It saw a downtick. You've got to remember the dollar's just ran some significant, and we'll move to the broader timeframes here, some significant downside. It's a significant point right here. We took out the 2020 highs, we took out the 2017 highs, and we're pulling back from that, potentially looking to set up for more continuation. You can see how just very typical for the dollar when you have this big run that you kind of take a rest, you let things catch up, and then you get that next level of continuation. And we've said and we've tweeted about it. I don't see any, and we've even got it on the chart. This wasn't a prepared chart. This is just one that we've been looking at. I don't see any reason why your dollar can't get to 108, 110. Why do I think that? And bearing in mind, this is bad for risk on assets, like crypto, like the equity market. Well, it's very simple. When you look at the DXY, it's compared largely, I think it's nearly 50% to the euro. The ECB hasn't even started upping interest rates yet. There's lots of calls now within 4 members within the ECB dominated states, if you will, to sort of come out and say, look, you're going to have to start upping interest rates because inflation's really getting away from us. I think we're going to see a real weak euro. And I think that's going to propel the dollar, which typically is going to be bad for everything. So when we kind of put the picture that we have in front of us together, and that's what we're trying to do on this channel, I think the majority of risk is definitely to the downside. It doesn't have to be the case. And remember, we've seen significant downside already. We can get some pretty epic rallies in the face of all this. But over time, just like we were saying yesterday and the day before, I had some really cheeky comments on my Twitter saying, oh, what happened to short in the market? And I said, just give it a little bit of time. The macro environment isn't supportive of a runaway pump. And sentiment-wise, I mean, we're looking at the crypto space. Guys, I can't tell you how much good news I'm looking at daily. I think we had another Bitcoin, I think it was a futures ETF approved today. You've got, the world is moving towards cryptocurrencies. It's adjusting and it's accommodating for it. And it's building up that structure that's going to allow it to thrive into the future. But right now, it's just so tethered and tied. I mean, you've only got to overlay the Bitcoin chart with your equities. It's so tethered and tied to everything. And even the likes of gold actually saw a bid down with everything. It didn't retrace quite as much. So when I'm looking for strength in assets, I want to see, Bitcoin moved significantly more down and didn't manage to hold and actually broke a new low. Likes of gold and stuff didn't, but I still think gold potentially is looking like it's going to go down. I think everything in a liquidity tightening market looks like there's more downside, and you guys have got to be prepared for that. There's no point in me coming on here, and I know people love it when I'm bullish, and I am extremely bullish on the crypto space, guys, but there's no point in me coming on here and going like all these other analysts are doing, going, yeah, we're off to the, this is a falling wedge that we're definitely going to break out of. We broke, and then look what happened, guys. And the thing is, you did indeed break. This was indeed a falling wedge, no criticism there on what they were looking at, but the problem was, why did it break out? It didn't break out technically necessarily. I mean, technically it did break out, but it didn't break out technically and fundamentally, it broke out on the back end of the Fed, essentially giving markets that little sigh of relief that was very, very quickly squashed. I think you've got people looking to get out this market, maybe having a idea of the overall sentiment. And not only did you break this falling wedge and back into it and below it, you also invalidated along a trend line, which to me signals more downside. And places that I'm watching now is your sort of 34K range, which are not far off, and then 32, 33. And then we'll see if there's a basing there and if we can get that kind of continuation to the downside, which is going to be an amazing buying opportunity, guys. And that's really the good news out of all this. So you guys have got a lot to pay attention to today. I will keep you up to date on it tomorrow and, of course, do a video telling you how everything's gone and if indeed markets reacted to it. I think they will do. But you've got to be stoic in these kind of markets, guys. And if you want to be an investor, there's no harm in being a passive investor for the next 5 years. Yeah. You don't really need to check your crypto portfolio. You've got good enough faith that it's going to do well over the long term. That's fine. The reason I'm net long in terms of my spot position, and yes, we do have an allocation of stable coins now, around about 25%, hold all my Bitcoin, Ethereum, Cardano, that sort of stuff, is because I believe in what's coming over. I think this is going to be the biggest growth sector in the next 5 years. I think that's going to be quite clearly shown. Crypto is a new technology that's very early on its adoption and is going to absolutely explode. You're going to see exponential growth for users in crypto once it's sort of built out and facilitated. And it's at a very tender spot given the fact that we've got regulations literally around the corner. That could see crypto fly, but I think there's more downside before we get there. And also in terms of the macro, you've got to be well aware that things will get undone. They're very hawkish at the moment. They will turn dovish at some point, and that's going to be facilitating of markets and more so your higher beta markets, and because they're going to be suppressed and they're going to see this sort of spring-loaded effect like crypto to the upside. And that's what we're going to be capitalized on. We're going to be riding, and we're going to be helping you guys do the same thing. So if that sounds good, guys, make sure you hit that subscribe button. If you've enjoyed this content, a like is always appreciated. So is a comment, and I'll catch you all in the next YouTube video, ladies and gentlemen. Thank you very much for watching.